How you guys doing? Hope you're doing fine. Hope you're just doing. How you guys doing? How you guys doing? What's going on? How you doing? As I promised last week, I'm gonna show you some good ways to trade gold, trade gold miners, silver, and you cannot do without. I learned this throughout the years and years and years. It is gold is not an independent asset. I'm sorry if I offend the gold bugs. I'm sorry if I offend the gold miners, the people that I don't know, the what I call them, the cheerleaders. I'm sorry to offend them. This is not for you guys. This is for the people that want to have new ideas. So gold is like any asset class; it goes up and down. Contrary to your view, it only goes up. So let's start with the ultimate correlation with gold. Usually, gold throughout the years have a negative correlation with dollar. So what do you do first? You always analyze. You always try to see. So you could see from 2010. I could go even back further, but let's do the last 10 years. You can see the negative correlation with gold, and gold is the black line. The USD is the blue one. So you can see the negative correlation. So what do? You always analyze dollar, then go back to gold. Then you do the correlation that I told you about. Then you do the confirmation. It's a lot of stuff I'm going to go through right now. So we have to understand the concept of correlation. So the first concept of correlation is treating gold as a currency. So a currency, this is like a cross currency trade, gold and dollar. Another thing, sometimes gold is goes in tandem with the bond market, TLT. So in this case, let me try to get rid of that. Oh well, let me do it this way. All right. What did I do? All right. Okay. In this case, sometimes gold decoupled from dollar and go and have a coupling trade with the TLT or bond market. This was true in June 2019. It was true in many years, but let me just focus on June 19. See how they worked in tandem together, and they went all the way up, so they were like mimicking each other the whole time. Okay? So you always have to sit down before you trade gold and see at this particular time which gold is correlating with what asset class. And you could always try to do things before. So the last meltdown, where a lot of cheerleaders and a lot of gold bugs was crying that gold is going to 3 million at this time right here. I'm going to tell you another bearish view, but let's look at this correlating view. At that time, TLT gave a bearish signal before. Let's put him, okay, like a couple of days before. Extreme bearish signal, extreme, where it came out of the Bollinger Band in a terminated move with the very ugly bearish candle. So I was tweeting that the sky's falling at that time, and a lot of gold miner people and gold bugs were trolling me at that time right here. But I was trying to help somebody. I wanted to help anybody, and I was called genius at that time, and I am not. I'm a borderline retard, as I said many times, and I'm not trying to be modest. I have issues. Anyway, so at that time you will cash out. You will leave gold if you understand the correlating trade right here. And look what happened. They moved back together. And right here, gold Gold right here, it was correlating with the dollar. So you have to switch on and off the correlation. You have to focus in what asset class is correlated. So you could go back test the TLT, and you could see how TLT helped you even get in this beautiful bull run last June 2019. Okay, so you could do that. You could really do things primitively if you really focus on a correlating trade. At this before this meltdown, even silver was not confirming gold. So let's go to silver. Okay, silver, gold at that time, and I'm really moving to a different correlation thing. You know what? Let's stay in the correlation trade. I'm sorry, I really am. I told you I'm a retard. You don't believe me. So, and sometimes the gold get negatively correlated with the stock market, and this is briefly. Usually, it's not the case, but sometimes they put some algos and things, and it becomes negatively correlated for sometimes. So this is, in my experience, this is always temporary. Yet it should be taken seriously. It should be taken seriously. Okay. So this is the time where we have brief negative correlation between the Dow and gold. And this time, you can see a negative bearish action in gold last August. Yet, at that time, we have the negative correlation with the market. So the market tanked during the Chinese tariff, U.S.-Chinese tariff war. I don't know what they used to call it that back then. And the market goes down, gold goes up, and vice versa. And you could see that it's easy. You could have seen that like days before that. So you always focus when the market is correlating with the gold is correlating with what. So in this case, it was correlated with gold. See, last October 2019, gold was in extreme bullish mode, and everything was intact. Elliott wave, MACD strategy, bull in Japan, everything, even breakout strategy with the beautiful trend line. Yet it was negatively correlated at that time. The correlation was intact. So when it's right here, this is it. So when it's right here, October. So it was breaking out right here. But at that time, bullish action was taking place in the Dow. So Dow was going for all-time high, and look what happened to gold. Boom. So you could see that. So you could have done your homework 100%, and you could have lost money. But if you did the correlation trade, you would have saved your money. So the Dow went to all-time high, and after that time, gold went back to correlating with the dollar, and they went together up in tandem. And at that time, TLT right here, TLT was giving us bearish action. So you should have understood that. And now also at that time, TLT and gold and the market were going up in tandem. So the negative correlation with the Dow was brief, right here. But the positive correlation with TLT or the bond market was intact. Nothing wrong happened. And even the time of this TLT and gold kept going up together. But briefly, the negative correlation came with the market right here and right here. But you have to understand that you shouldn't just disregard that. Good. So we finished the correlation trade. Please remember that. So to recap the correlation trade, dollar negatively correlated most of the times, but sometimes it decoupled. TLT, the same thing. Sometimes it decoupled. The equity market, sometimes they have negative correlation, and you have to focus on that sometimes. and it gets you really hurt if you don't. Okay, so the second aspect of the correlation of gold trading is the confirmation. And it's like the Dow theory. Gold has to have confirmation. Silver have to confirm gold new high, or gold 52 weeks high, or 5 years high, whatever, whatever that high is. And the gold miners do the same. All right. So, in this case, silver made a high in August, and it failed to make that high last Feb. At that time, gold was making a good high in July, August, and made new highs in March 2020. So silver failed to confirm that. So that's always a negative thing. You always have to be careful. You cannot disregard that. You cannot listen to the cheerleaders that will telling you gold would go 3 million at that time. You just focus on the chart. Confirmation, no. Gold miners do the same. They had a high right here, GDX, in September. They failed to confirm that high in March 2020. So always focus on the confirmation all the time. All the time. Be careful. Be wary of cheerleaders. Be wary of people that have incentives to try to fool people into gold trading in the wrong times. Okay, so I talked about the correlation is extremely important. I talked about the confirmation, because during the change of direction you get really hurt, so you don't focus on gold itself. All right. Okay, and also that doesn't mean that you don't focus on gold. On gold charts. You should always focus on gold charts. You should always focus on this stuff all the time. But focus also on the hidden things, the correlation and the confirmation. And focus on the Elliott wave, conventional technical analysis for gold, And also watch out if your correlation is at the pivotal move, like what happened in the dollar. Last August, the cheerleaders, everybody was going crazy that gold would go to 3 millions. And at that time, there was some bullish developments in the dollar, and tells you that there's a major move coming to the opposite side. So you should focus on that too. You should not just focus on the bullish development in gold, and you understand dollar is more strong than gold. It's a world currency. It's the king dollar. So you have to understand that. You have to be focused on that. This is where gold start making failed in highs right here, because of these bullish actions in the dollar. You had the bull in Japan. You have a beautiful second wave bullish structure in the Elliott wave. You have a bullish MACD crossover, and you could check it. You could correlate that too with gold, and you have a beautiful hammer that took place in September, and that's how and you have a beautiful bullish divergence that started in July. So you have to take this in consideration. And it's the mirror image in gold. You have that bearish divergence, all the stuff. So you have to focus on that too. And you always have to focus on mass psychology. So you have to be careful what the masses are saying at that time. I think so. So I think gold made a big high at that time. So you must be careful. You always must be careful of this stuff. You can never, ever focus on gold by itself and forget about these correlation I told you about. Okay, and another thing you could focus on in a normal market is the seasonality. So this is the seasonality trade based on months from 2016 to 2020. It tells you the percentage of the time that gold made certain moves. So from 2016 to 2020, 100% of the time, gold made at least 4%. And you can see the percentage move and the probability move right here. It really helps you. And you could move the time too. You could make it 20 years, whatever. It's really important. It really is important. So to recap now, we have to, and this is just a strategy, the cloud strategy with gold by itself. And also don't forget to analyze gold by itself. So what do? You analyze gold through and through and through. Then you look at the correlation. You understand it always goes negatively or positively correlated with some asset class. You have to analyze it through and through and through and see if that correlated class, is it going through a pivotal move. You have to focus on that through and through and through. Then you look at the confirmation with silver and gold miners. You analyze that through and through and through. Then, and also you have to do a lot of work on each and everything in the correlation. You have to analyze each and every asset class with the conventional technical analysis, Elliott wave, all the stuff. Gold is extremely hard to trade, but it's really, really very profitable. And it gives you really a lot of competitive advantages if you understand all that. And I really hope you guys understand this concept. You could archive this video. You could listen to it over and over and over again. It's very simple, and you should take it seriously. The first thing you should do, not to follow anybody in Twitter that is always Prema Bull or Prema Bear all the time. Just unfollow and block. And beside that, please like if you like, subscribe and share. And love disco, please. And love gold. I love gold too. I've been trading gold for decades. And I still love it. I have nothing against gold. I love you guys. I love gold bugs. And please subscribe and share and like. I love you all. And this goes forever.